Similarly, if it is a bearish trend, okay, and yeah, similarly, if it is it is a bearish trend that started off as a bullish trend, but then we have broken the previous highs and lows, yeah. So we are expecting to come and do a structure retest down here, okay. Yeah, so that means that we don't expect to break this bearish trend until we get to the
structure retest.
Yeah, so this means that price can pull back all the way to this last lower high, but we can't break above that, because that would mean that we have broken the trend. Okay.
Yep.
Yeah, that means we can pull back all the way to this last lower high, but then eventually continue with the overall direction until we yes, we get to the structure retest. Okay, so it is very important, especially on the monthly time frame, to understand, so we can see how we can relate. Now, the best example, I want to just listen to my thinking as I'm analyzing this, because when it gets to this phase, it's just going to require essentially a lot of just critical thinking and normal reasoning with relation to our way of trading. Okay.
All right. I'm putting up the volume, and I'm bringing up the volume, and I'm going to take notes.
Okay. So yes, we're on the monthly time frame. I'm also recording this. Okay, so you can.
Oh, thank you.
It is, yeah. Okay, so if we just look at this bit of price action, okay, so this is what I'm looking at. Okay, if we look at this bit of price action from the monthly time frame, okay, so what we have here, okay, is price. We have price breaking these previous highs and lows. Okay, then we kept on making a series of highs and lows. Okay, so what we know, for one thing, is that we are anticipating price to come and test the invalidation point, which would be our first target, the second last lower high. Okay, so what this tells me is that we are on a downtrend, and we don't expect to invalidate that downtrend until we get to the the structure retest, or the invalidation point to begin with. Okay, so what this means, that we can keep on going down and we can pull back up, but we cannot break this last lower high. Okay, because breaking this last lower high would mean that we have now broken this bearish trend back to bullish, something that we don't expect to happen. Okay. Yeah. So so that means that on the monthly, price can pull back all the way to testing this last lower high, but we can break above it. Okay. So if I look at this price action here, so this is our monthly invalidation point. Okay, and this is our last lower high. Okay. So this tells me that price can pull back, but essentially we don't expect to get a monthly candle closing above this last monthly lower high. Okay. Yeah. So with this in mind, so we now go down to the weekly, because we have already understood the monthly time frame, where it's heading, and where the end of the pullback can be. Okay. So when we go,
you know the limits.
yes,
The
exactly,
limits of the
exactly,
trend in monthly.
absolutely. Like all we need to know essentially on all time frames are the limits. Okay.
Yep,
Yes,
I
like
completely agree.
mhm. Like this is the limit, or this is as far as we can go
Yeah,
and still maintain our monthly bias. Okay. So coming to the weekly, okay, coming to the weekly, we see that it was the same situation, except here, yeah, we were making a series of lows, lower high, lower low, lower high, lower low, okay,
yeah,
except we broke the structure, okay,
yeah,
we broke structure, and now on the weekly, on the daily, and the 4 hour, we are essentially allowed, or we are free to break structure at almost any point, as long as we are within the monthly territory, as long as we haven't broken the monthly structure. Okay. So
okay, so
so
we
price
can
can
break.
essentially be as flexible as it can be. Okay.
Um, yeah,
Yeah. Yeah. So on the weekly, we broke structure and we tested the invalidation point. Okay.
yeah,
And we tested the weekly invalidation point,
yeah.
which could have been your first trade here, okay? But from here on, we have already now started
Uh,
our bullish trend on the
uptrend,
weekly,
yeah,
okay? And
yeah,
yes, our uptrend, and we are allowed to be in an uptrend on the weekly or the daily, okay? Because we are still within the bearish territory of the monthly. Okay,
monthly.
essentially the higher the time frame, the more stronger or significant it becomes. Okay,
Yeah,
so even though now we are bullish, okay, we are in an uptrend on the weekly. That means that we can be in a downtrend on the daily, as long as we don't break the weekly time
all right.
frame. Yeah, as long as we don't break the weekly time frame, and we can be in an uptrend on the weekly, as long as we don't break the monthly time frame. Okay, so that
Okay.
means that is a succession of importance when it comes to top-down analysis. Okay, so we have broken. That means that okay, so we have now a low, a high, a lower high, and a higher high. Okay,
Yeah,
so we have a low, a high, a lower high, and a higher high. Okay, what does
yeah.
this mean? This means that price can pull back, but we
Oh,
don't
it's
expect it
black.
to. Yes, we don't expect it to break below this last lower high, because we are bullish on the weekly time frame. Okay,
Yeah,
yeah, because we already broke structure and tested the invalidation point.
validation point.
Okay, yeah.
Yeah,
So what this means is that if I see price has broken structure on the daily, or yes, on the daily, that means that we can go down, but we cannot exceed this next this last lower high. Okay,
yeah.
yeah, that we don't expect price to exceed this last lower high, because
Because
this,
that would invalidate the weekly bullish bias.
yes, this would invalidate the weekly bullish bias, getting a candle closure below.
Yeah,
Okay, something that we don't expect to do, because we have already broken and tested the
validation.
the invalidation point. Okay,
Awesome.
yeah, so that means essentially the higher the time frame that you base your trade on, the more safer you would be. Okay,
Yeah,
yeah, so like at this point, if you had taken your trade right at the weekly invalidation, that means you wouldn't have to worry. I mean, in that case, if you were a more long-term swing trader, okay? So that means you wouldn't have to worry about any of these pushes and pullbacks. You know that you're safe, okay?
Yeah.
Yeah. So similarly, if you take a trade from the monthly, that means that you can run with the trend all the way, and you can hold it all the way down.
Structure.
Yes, to the monthly invalidation. Okay.
Yes.
Yeah.
Wow.
But that doesn't mean that in the between here and the monthly invalidation, price can pull back. Okay, can invalidate and make bullish trend. But you know that no matter what, price will never break above your entry. Okay, so you always be safe and you will always hold just until price gets to your long-term target. Okay.
All right.
Yeah, and that is the basis. That is the idea behind the some of the long-term swing trades that you see someone holds, or that me personally I have held for weeks or for months at a time. It gets to a time. Yes, I have taken some trades where I've held for at least 2 months, until it gets to a time and you're like, why am I doing this? Okay, I'm tired. Okay. You just get tired of seeing it and decide to close it, but you can hold it even for a year. Okay.
Wow.
Yeah, you can swing it like for a year, because some targets are like very far away, so you can hold it. Like, for example, we don't know when price is going to come all the way down here. Okay.
Nope.
Because this is the monthly target. Price is going to take a while to eventually get to these highs, which is the weekly structure retest and the monthly. Okay, and then it will start going down. Okay, it might break again. Okay, but you'll be holding and holding forever. Okay.
Yeah.
Yeah, and the good thing of this for someone like you, who likes exploring and traveling, that means you could take 3 swing trades and travel for 3 months or for 2 months, and never have to worry about doing analysis or anything. Okay.
Yeah, and that's you just described my my ultimate goal, my dream, whatever you want to call it.
Yes, exactly. So that is the idea, the freedom. Okay.
Yep.
The freedom, essentially. Okay.
Exactly.
Yeah. Yes. So so on the weekly, that means we don't expect to break below these previous weekly lows. Okay. Yeah. So when we go to the daily, this is where it gets interesting, because this is our weekly level here. Okay.
Yeah.
Yes. Okay, this was our invalidation, which we have already cleared. So let me just take it out. So this is our weekly our weekly lows. Okay.
Yep.
Yeah. So what this means is that we don't expect the weekly candle to close below this blue line. Okay. Yeah. That means that anytime within the week, we are free to break, and we are free to get daily candles closing below, but we just don't expect by the end of the week to see a candle closing below that. Price must pull back right before the end of the week. Okay. Yeah. And then that will just leave 1 week below, and it will close above. Okay. Confirming that we are still bullish and we are bound to continue with our bullish bias. Okay. Yeah. Okay. So now looking at the daily time frame, okay, it is the same sort of scenario here that we broke the invalidation point. Okay, we broke the invalidation point. Then we went straight up to make a new high. Okay, then we made a higher low. Okay, and then we made a higher high. Now, what I want you to notice here, okay, is that this whole this was the last lower high, okay? Then we made a higher low. I mean lower low, okay? Then we made a new lower high. We didn't invalidate anything here, okay? Then we made a new lower low, okay? So this whole price, these whole candles that you see, they are the same. It is just equal to, it would have been the same if it was just one bearish candle. Okay. Yeah. So we have a low, lower high, lower low. Okay. It is pretty much the same idea, only that here we had a series of bullish and bearish candles. Okay. So what that does, get rid of these brushes. What have I done? Okay, so what that does essentially, that means that this is one huge candle. Okay, that means that this is one huge candle. Okay, and this pullback can also be considered as one huge candle. Okay.
Yeah,
Yes.
I understand your reasoning.
Okay, great. Yeah, one huge candle. Okay, then this is the continuation. Okay, so that means that we have a we have a low, we have a high, then we have a lower high, then we have a higher high. Okay, so that means now on the daily, this is our weekly level, but that means that price on the daily can pull back, but we don't expect to break below the last lower low. Okay, price, we don't expect price to break below the last lower low. So essentially, the deeper you go, the process is the same, but the deeper you go with your analysis, the more accurate you become in terms of entry and pip count, essentially from your potential stop loss. Okay, so we could take a buy trade from the weekly, okay, because we are sure that price won't close below the weekly. Okay, but then our stop loss would have to be much bigger, and for some other pairs which are much more volatile like UDP, or gold, it's almost impossible to take such a trade, because then you might want to have like a 200 pip stop loss, something which is may not be in your risk profile. Okay.
Yeah, no, that's insane.
Yeah, that's insane, essentially. Okay, so that means, so if we so up to this point, okay, if price was around here, then we would have known that, okay, we are allowed to break below. Okay, we are allowed to break below the weekly, but yes, but we cannot get a daily candle. We cannot get a daily candle closing below the daily. Okay.
Right.
Yeah. So that means that our entry just got so much more precise, as opposed to if we had to take a trade from the from the weekly time frame. Okay.
Yeah.
Yeah. So now that we know that, okay, so this is the daily level, so that means that we cannot go below it. Yes, exactly. And why also can't we go below it? Because we haven't broken any daily structure, as in we are bullish on the daily, and we haven't broken any sort of daily structure.
Exactly.
Okay, so that means you're free to take a trade from the daily time frame, because you know that we won't get a candle closing below it. Okay, so let's take a look at the 4 hour. Okay, so looking at the 4 hour, okay, what we see is that from these highs here, we did break structure. Okay, I mean we had a low, a high. Let me zoom in.
Oh, meaning that we broke previous bullish structure.
Yes, exactly.
Okay.
We broke the previous bullish structure. Okay, and on H4. Okay, and we didn't test the invalidation point. So what does it mean when we don't test the invalidation point? When price doesn't test the invalidation point and goes straight, that means that there is a very strong bearish presence. Okay, and that means that we are more than likely to go and test the very low, the very last lower lows of that trend without invalidating the bearish, I mean the uptrend bias, so the daily bias or the the weekly bias. Okay. Yes. So what that means is that we are looking for the lowest point that we can go on the 4 hour and still be safe on the daily. Okay. So yes, so essentially what this means that we are looking for the structural retest that we would need to test as low as we can go, which would give us enough room to essentially just close above the daily, above the daily low. Okay. So that means that essentially we know that, okay, if we look at this trend where it started, okay, we started from down here, okay, and this is the structural retest over here. Okay. Yeah. So that means after seeing this and this and seeing this sort of energy, okay, so we broke, but when we pulled up, we didn't test the invalidation. Yes, that means that we are aiming straight directly to these lows. Okay? Yes, do a structure retest.
Wow.
Yeah, but then, I mean, the distance from up here all the way down here is 200 pips. Okay.
Right.
It's just a pullback, but hey, it's a 200 pip pullback. Okay.
Yeah. Exactly.
Yes. So it's a hell of a short term. It's a hell of a short term trade. Okay. Yeah. So on the 4 hour, so we know that we are bearish on the 4 hour. What does that mean? That means that now we don't expect to invalidate the 4 hour trend. Okay. Notice the difference. We can break, but we don't expect to invalidate the 4 hour trend. Okay. Yeah. And what I mean by invalidating the 4 hour trend is, I mean that breaking above any sort of invalidation point. Okay. So this is the trend. Okay. That means we can break the trend, but in order to invalidate the trend, we would start by breaking the invalidation point. Okay. And then these last highs. Okay. But remember, we had a very strong head start, and we didn't test the invalidation point. That means that we don't expect to break the invalidation point. Okay. So yeah, so that means that from here it is only sort of logical thinking or logical playing with the with the charts. For example, your very first short trade would be after after this sort of impulsive continuation followed by a channel, okay, and we know that the channel is going to test the invalidation point, okay. In this case,
Yeah.
can you spot the invalidation point?
The validation point, yeah. It would be here. Annotate. Uh, it,
Exactly.
um, it's this one, right? The one on
Up
top.
behind here, yes, up here.
Yeah.
Yep.
Okay.
So yeah, so what this means essentially is that you're just
Yeah.
going to be looking at the 4 hour and the 1 hour, okay. Although, okay, now
It's doing like before.
oh again, shit.
I think. Wait. I think it's okay. I see. Okay, I see your chart.
Okay,
Okay, it's back.
it's back. Okay, great. Okay, so essentially now you can you can go
No,
all the way
it's not,
back to yeah?
not working.
it, it's not working. Hello,
No.
hello, can you see my chart?
Hello. Uh, yeah, I see your chart. I think I hear you better now.
Oh, okay. So that means that for more and more. Hello.
Yeah. Hi.
Okay, can you see my chart?
It says that you started sharing your screen.
Okay, let's wait for that.
Okay, I see it. Wow, good.
Yeah.
Good.
Yeah. So essentially,
Yeah.
you can drill it all the way down to the 1 hour and the 30 minutes. Okay, but okay, according to my personal preference, okay, I usually like to take.
What's your personal preference? Sorry.
Yes, according to in my personal preference, I usually like to take the trades from the 4 hour time frames, okay? Because now as you can see, every pair. Hello, hello.
Yeah. Yeah.
Yeah,
Hello.
as hello. I was saying.
Hi.
I was saying that
Yeah.
I prefer to take the trades from the 4 hour because you all the time frames, okay, all the time frames have the freedom
Yeah.
to be bullish or bearish as long as they don't break certain levels.
Yeah.
Okay, so all the time frames have the freedom.
Oh, makes sense.
Yeah, all the time frames have the freedom, and sometimes
So you can take.
hello.
Yeah. Hi.
Yeah, you were saying.
I'm still here. I'm listening. Yeah, I'm still here.
Yeah, all I was saying that. Hello.
Hi.
Oh, oh,
Is it lagging or?
oh, no. I just got a notification from Zoom that I have been signed out. So I thought the meeting was cancelled or something, but it's good that you're
Oh,
still here. Let's just go on. Okay?
yeah.
Yeah. So
So H4 in 4 hour, you have the freedom to be long, to be short, without invalidating big time frame, like monthly invalidation or weekly invalidation.
exactly. That means that you can even scalp by being by if you're looking for like 10, 15 pips, you can go long on 30 minutes or the 1 hour, as long as you're aware of the higher time frame movement. Like for example, this was an 8 pip pullback. Okay, this was a 76 pip pullback. Okay,
Yeah, that's
and you
okay.
can find this. You can find this the entry for this when you look at much lower time frame, the 30 minutes, 15 minutes, and you can take advantage of that. Okay, yeah, but just having it in mind that the overall direction, we are having a short term correction, which is a 200 pip correction to the lows, after which we can expect to now continue with the overall bias.
Uptrend
Yes, overall bias uptrend. Okay,
to the monthly
to the
invalidation
monthly,
to
which in itself is a correction. Okay, which in
yeah,
itself is just a correction from the weekly. Then the main trend will be,
down,
yes, will be now from the monthly all the
upward.
way all the way down.
Yeah,
Okay, yeah, so essentially that is top down analysis for you, and that is how
okay.
we look. Yes, and i would advise that you take most of your trades from the 4 hour, because yes, because the lower you go, it just becomes so much more unclear. Okay, yes,
Okay.
it just becomes less clear and less confusing. You can do it for starters, just to practice and to train yourself, but
Yeah.
you should just consider that as a stage. And to to be more profitable, okay, now this is just me speaking. Okay,
Yeah.
to be more profitable, you have to be looking. Okay, if even if it's a counter trend on the 4 hour, okay, it
Yeah.
has to be at least 120 or 150 pips. Okay,
Okay.
that way, if you are putting 20 pips of stop loss, okay, you
Yeah.
have at least a 5-to-1 risk to reward, at least a 6-to-1 risk to reward ratio. Okay, you
Yeah.
can take a trade that is 1-to-1, that you're risking 20 pips to get 20 pips. It's okay, but it's just not lucrative enough, in
No.
my opinion. Okay,
No.
like,
No. I agree.
yes. So most of the trades that I take, or most of the counter trend trades that I take, they have to at least be 100 pips. Okay, that way you
Okay.
make five times more compared
What you
to,
risk?
yes, compared to what you risk. Okay,
Got it.
yeah,
Oh, that's okay.
yeah. So do you have any questions?
To be honest, it's fairly straightforward.
Mhm,
It's about like determining your monthly invalidations first,
mhm. Yes.
where the trend is going.
Mhm,
Then you just do the same thing for weekly, daily H4,
mhm.
and it's determining um those points. So no, I don't really have any questions that come to mind. If we do, what time is it? It's 10. So
Yes.
did you have time for one last example that we can do a top down analysis, and then I can go try and find them, and you can correct me.
Okay. Well. My idea was that believe me, this is much more complicated.
Yeah.
So what I wanted you to do is to just go and do at least 3 pairs.
Okay.
Okay, a top-down analysis of at least 3 pairs from the monthly to the 4 hour.
Okay.
Okay, but those 3 pairs have to be bearish on the monthly, but pulling back to test the invalidation points. Okay, I
There's
mean,
someone.
well, I guess what I'm trying to say is that for a situation similar to this, okay,
Yeah.
if a pair is bullish on the monthly,
Yeah.
then you can leave that aside because we haven't looked at the bullish scenario. But essentially, it's the same thing. It's just the vice versa. But we would have
Okay.
to do a webinar on that. But for now, I want to do just a few pairs which are bearish on the monthly but bullish on the weekly, so that you can try to practice and see how the scenarios are different. Okay, then you look at the daily time frame, if it's bearish or bullish, or if it's going to test the invalidation to reverse. Okay, so basically you're going to identify the monthly, weekly, daily, and 4 hour levels which cannot be broken. Otherwise, if they are broken, then the monthly bias would shift.
Yeah.
Okay, like what we have done here, that we expect price to go back up to the bearish. I mean to the monthly. Okay, and
Yeah.
we have looked at the weekly. So just try to make it like when you're doing the analysis, try to put
Yeah.
to put yourself in a way like you're telling yourself a story, that this is what happened in the monthly, we're bearish. This is the level that if we break on the monthly,
Yeah.
we will be bullish, and we don't expect that because we haven't tested the validation point. Okay, so on the
That's a good
weekly,
idea. I like
yes,
it.
yes, that is how I do it. That is how that is what I'm telling myself when I'm doing top-down analysis and analyzing from the monthly to the weekly, all the way from the 4 hour. Okay, all the
Right.
way to the 4 hour.
Viewing it as a story.
Yes, yes, and it just becomes so much interesting. It makes you feel like you're talking to the candle, and you're talking to yourself. Okay, okay,
um, yeah. Quick question that popped up to my mind.
yeah.
During the last Zoom, we were looking at GBP USD. So on the
Uh-huh.
monthly, we had determined on the monthly it was bearish, but on the weekly it was bullish, and on the
On the
daily
daily, it was bearish.
it was, yeah, exactly.
Okay, so now we need to you as I told you, I think we would be able to answer that today.
Yeah.
That so we're bearish on the monthly,
Yeah.
okay, and we are bullish on the weekly.
Yep. Exactly.
Yeah, because we have broken the previous weekly highs. Okay,
Yep.
so what this means is that we have to look for the monthly level. We know that we can't exceed this monthly level, right?
Right.
Like we
Right.
don't expect to get a candle closing above that monthly level. Okay,
Yep.
that what this means is that price can skyrocket to as far as it wants to go. And believe me, these pairs do get that crazy sometimes if there is enough fundamental reason. Okay,
Yeah.
yeah, as long as just by the end we come and close back below the monthly. Okay,
Okay.
that means price can go wherever it wants to go. It wants to go.
On
Okay,
the weekly.
yes. So now on the weekly, we look for the the invalidation point. Okay, so now like here our invalidation point is way up here. Okay,
Right.
which is like at 41. Okay, which is
Yeah.
like 1,000 pips. Okay,
Yeah.
yeah. So this seems a bit way too crazy. Okay.
It does.
Yes, it seems a bit way too crazy, but really nobody knows where price is going or what is going to happen. Okay.
Nope.
So until that happens, okay, if price doesn't come, if price that doesn't go all the way back and it breaks structure, well and good. Okay. But the higher the time frame, the more stronger it becomes. Okay.
Okay.
That means that the monthly trend has power over the weekly trend, and the weekly trend has power over the daily trend, and the daily trend has power over the 4 hour. Okay,
Wow.
yeah. So as long as we are bullish, we are bearish on the monthly, but we are bullish on the weekly. That means that we are going to treat the weekly as bullish, and we are going to keep on assuming that price will get there, okay, or will go as far as it needs to until proven otherwise. Okay. Yeah. So that is how that is how you treat, so to say, that is how you treat your thinking. Okay. That they say that the financial markets are not perfect, but if you want to be profitable, you have to treat them as if they're perfect. Okay, you have to do your analysis, and you have to assume that the markets will play according to your analysis, that the markets are perfect. Okay, although they are not perfect, and there is all these theories about perfect market theories, and we have all these guys with PhDs who are arguing. Others are saying the markets are perfect. Others are saying the markets are perfect. Okay, but you just have to treat them like they are perfect, and you have to go with the assumption that if your analysis is entirely correct, then everything will play out according to your analysis.
Right.
Yeah.
Okay. That makes sense.
Yeah. So that's the way it is. Do you have any other question?
No, no, that was mainly it. I guess I'll get down to work and do the top-down analysis for three pairs. Then they have to be bearish on monthly.
Yes, exactly. Exactly.
Oh,
Okay.
gold is dropping.
Gold is dropping, I know, but it's it's very bullish in my opinion.
Yeah.
It's very bullish because we just broke above the monthly invalidation point.
Yep.
Okay.
The last higher high.
Yes, this is a monthly validation point here. Okay.
Yep.
We just broke above that. Okay. So that means this is a whole trend. That means that we can't go all the way down, but we can't break below this last
Last higher low.
yes, this last high low. Okay.
Yep.
Which also happens to be the very the very same level on the no on the weekly. So on the weekly,
Yep.
so we have a low, a high,
Yep.
lower high, then you have a higher high here. Sorry, a high low, high low, then you have a higher high. Okay.
Yep.
Yeah. So that means we wouldn't expect to get a weekly candle closing below that level, and this is going to be very interesting to see. Okay,
Yeah.
because we are having some very quote unquote some very profitable traders saying gold is bearish, and we are having other profitable traders saying gold is very bullish.
Yeah.
So yeah, so I'm waiting patiently to see what is going to happen with gold, because we have the Astro guys, okay,
Yeah.
yeah, saying that gold is bearish, and we have Uncle Ted saying gold is never bearish, is bullish, okay.
Okay.
Yeah, so it's going to be interesting to see. But if I was to short gold, I wouldn't go below this this hidden invalidation here on the daily. Okay,
Yeah.
this is the only this is, or if I was to buy, this is the level that I would consider, because we have broken above that trend. Okay, and
Yeah.
we are just making highs, and we are making progressive new highs. Okay, so the first sign, okay, would be
Yeah.
to see if we break these daily highs and lows here. Okay, like I
Yeah.
would want to see this daily candle closure and see how it closes. Like if we close below this daily,
Well, daily becomes the bearish.
exactly, the daily
Yeah.
becomes bearish. Yeah, the daily becomes bearish. At which point we would expect price to at least eventually come and test,
The hidden.
yes, the hidden invalidation point around here. Okay, keep in
Yeah.
mind that before that we still can pull back to test the invalidation point.
Of the daily.
Yes, the daily invalidation point. And the thing with gold is just it's a ton of pips. That to test the invalidation point, it's 246 pips.
Wow.
We can drop
Oh.
600 pips, you see.
Yeah.
Yeah, to test this daily, and then skyrocket and close above the weekly just before the end of the week. Okay, or it can just play around, then at the beginning of next week it drops, then it it runs. Okay,
Yeah.
yeah, now gold is the one pair whereby you can never doubt its capabilities, you know.
Gold.
Gold is the one pair which you should
Yeah.
never underestimate what it's capable of doing. Okay, like
Yeah.
a target may seem to be so far away, but
Yeah.
believe me, if you're accurate, gold will get there. Okay, like
Wow.
gold can do 1,000 pips in just a few minutes or hours. Okay,
Yeah.
okay.
Yeah.
So, for example, if you look at these moves, this is almost 1,000 pips in just 1, 2, 3, 4 days. Okay, so that means price can drop all the way
Drop
to,
hard.
yes, to this level and pull back, because the only requisite, or the only rule that we would be considering at this moment is that we close back above this weekly level, which is the last weekly lower high. Okay,
To remain
to
bullish.
remain bullish on the weekly. Okay, so that means price can do anything. So that is when, if you want to trade this pair, you just look at the daily, and then you look at the 4 hour to look at where your entries are, or you can even go as far as the 1 hour, just to be much more much more accurate. Okay,
Yeah.
or much more precise. Okay, because just a single a small wick on gold can be as much as 60 pips, 50 pips. Okay,
So
so yeah, with gold you want to be as accurate as you can. My last trade on gold was at this invalidation point here.
yeah. No.
Yeah, because we had broken structure. So yeah, so
Yeah.
took the entry at once we had broken there. So we're going to come back and test the invalidation. So we
Yeah.
test the invalidation, yeah, and went with it
That's
all
what.
up. Yeah, of course, I think this was a Friday. That's when I closed my trade, because I didn't want to hold my trade over the weekend. Anything can happen over the weekend, Trump says something and gold opens at 1525 or 1470 or something like that. So yeah.
Better to be safe.
Yeah. So,
Right.
for,
So that's great.
yeah. So you go get to work. This is your final phase. Congratulations. Like, man, I'm so happy for you.
Thank
Okay.
you.
Yeah, I'm so
I'm
happy
very,
for
I'm
you.
very, very excited to start applying all this knowledge.
Oh yes. Now what you need is a ton of practice with top-down analysis.
Yeah.
Yeah, you have to do a ton of practice across so many pairs. So what you can do you have a simulator? A simulator?
To click on replay.
Yes, you can click on replay, okay,
Yeah.
and
Yeah.
just look at previous months, okay, and see
Yeah.
how you would have traded. For example, you can replay. For example, you just have to select randomly. For example, okay, from here, okay,
Okay.
yeah. Then you do your analysis from there. Then you go to the weekly, okay. Then you go to the daily. But the thing with Trading View,
Yeah.
the free version on the free version that you get, this replay can only go up to the daily. Okay.
Oh, okay.
Yeah. If you want to go far below to the 4 hour, that means you would have to pay a subscription. A subscription, yeah. You have to pay a subscription. Let me see here.
So you take Pro.
Oh yes, I have to.
Yeah.
Yeah, you have to pay a subscription. You see, all you
Oh,
need is this basics, which is $12 a month. Okay,
okay.
so yeah, so once you pay that, then it's not necessary, but you just get a ton of tools to play with. For example,
Okay.
you can you get access to this chart layout where you can have two charts at once. Okay.
Okay.
Yeah, they can be two different charts, or you can have one chart on both two places. Okay. So
Okay.
yeah, what this means is that you just get much more clarity. So you can put gold on the daily here, and here you can put on the 4 hour. Okay.
Oh, okay. Cool.
Yeah. So that means it just becomes clearer. You just get to see things clearer. That okay, that is the invalidation. Now, for example, here it just becomes much more clear that this daily hidden invalidation,
Yeah.
okay, falls directly at our 4 hour invalidation as well. Do you see that?
1546.
Yeah, 1520. Okay, so we were saying that if we short gold, we would be
Yeah.
aiming at this daily hidden invalidation,
Yeah.
right?
Exactly.
Yeah,
Yeah.
yeah. But then that daily hidden invalidation is also at our where is it? Where is it? Oh no, no, it's not. Sorry, it's not.
I know what you, but
What I
I
was
understand
thinking.
what you wanted to say. Yeah.
Oh yeah, yeah. It's not,
It
unfortunately.
seemed that
It,
it
it,
was at the
I
same thing.
thought this line was this one.
Yeah. Yeah.
Yeah. Wow.
Yeah.
That would have been a hell of a confluence. Okay. So let me
Oh
put
yeah,
blue
that would have
for
been great.
yeah. Let me put blue for the 4 hour, and and red for the daily. I mean black for the daily. Okay. So essentially, it just becomes it becomes easier for you to navigate a chart and to see what a weekly level translates to the daily, what it looks like, where it is. So it gives you a little bit of an advantage, which is not a big deal. Like you don't really need. It's something that you don't really need, but
Yeah.
it's good to have.
Yeah.
Yeah. So
It's useful.
yeah, it's very very useful. It becomes very handy. But what's most important is this kind of replay on lower time frames. On lower time frames, which you get. Okay. So these are some of the things that you get when you pray for the for the pro. Yeah, you get to at least two charts. Okay, you can
Yeah.
save up to 5 layouts and
Nice.
so many other custom range bars which I don't use. So you see bar replay on the basic. You only get daily, weekly, monthly, and daily. But on the pro, you get all time frames. So that means,
Okay.
yeah,
That's good.
customize, and you get a ton of indicators that we don't use, and also alerts. Okay,
Yeah.
yeah,
Oh, you can send alerts. Nice.
yes, exactly. You can send up to 10 alerts. So
Okay.
that means, yeah, you can set alerts that for TradingView to alert you when price gets to a certain level, for example. So you can just input, for example, if it's a weekly invalidation point, you look at the price and
Yeah.
you set that alert, and then it will notify you via email or via text on your phone, depending on how you set it.
Okay.
Yeah, so it can be pretty useful.
Awesome. Yeah, I'll probably get that one, the pro.
Okay. Okay, so
Yeah.
I guess I should just wish you a good day then.
Thank you, and to you too.
Okay,
Thank you very much. Thank you very much for the session.
okay.
I'll get to work, and I think you were recording Zoom, right?
Yes, I was. I'm going to upload it to the drive. Also, I'll send you a link
Awesome.
very
All right.
shortly.
Cool.
Okay, have a good day.
Thank you
Take
very
care.
much.
Okay,
Take
thank you too.
take care, man.
Okay, you too.
Thank you.